Hello guys, welcome to another deep video. Today taking the look at Costco Wholesale Corporation, an American multinational corporation which operates a chain of membership-only big box warehouse club retail stores. I think you've heard of it, Costco is pretty well known. So now let's first start with the valuation. The free cash flow yield is 1.67%. The price to earnings is 59.49, so it is pretty overvalued, especially for retail. Now let's go to business metrics. They have a return on invested capital of 20%, return on tangible assets of 10.7%, return on equity of 31.90%, and a cover ratio of 0.96. So they have pretty good business metrics, but to be honest, for such a high valuation, they're kind of trash. Nvidia has uh, much less premium and 3 times better business metrics. Now let's go to grants valuation. You see the estimated earnings per share for the next fiscal year and a 10% projected growth rate with a 5.45% current yield on AAA corporate bonds. We get a valuation of $248. Next, going on to discounted cash flow. Of course, using a 10% growth rate with a 2% perpetual and an 8% discount rate, we get an intrinsic value of $428, less than half the current price. Now, for historical multiples, they're trading at almost twice their historical average of 43.37. And for multiples I've compared them to their biggest competitors, Walmart, Target, Dollar General, and Dollar Tree. And we get an intrinsic value of $371, which is calculated by multiplying the average price to earnings with Costco's earnings per share. Now, for dividend discount model, I've applied a 7% growth rate, which is lower than their free cash flow growth rate because they have a pretty high payout ratio, so they cannot afford a higher dividend for some time. So I've applied a lower growth rate to the dividend than to the free cash flow. Now the output is the average of all of these four, and that is the intrinsic value of $389. And of course, applying a 15% margin of safety, we get an acceptable buy price of $331.49. So the stock is extremely overvalued, and in my opinion, of course, this is just my opinion. I'm not a financial advisor. You should do your own analysis, but in my opinion, this stock is a sell. Of course, if you do your own due diligence and think that the stock is a buy, go ahead buy it. But there just are much better opportunities out there in the market. This stock is extremely overvalued, and to be honest, it doesn't have such a high growth rate to warrant these multiples. So to get a picture, Nvidia, which is a tech company that is considered extremely overvalued, has two-thirds of their multiples and 3 times better business metrics and also much better growth rates. So this company is just absurdly overvalued. Now, this stock is a sell in my opinion. Of course, you don't do your own due diligence, but I'm unsure what else you can find here. Before we end the video, I'd like to talk a bit about our affiliate, Ticker Data. Ticker Data is the tool that I've seen in this video. So with the real-time financial data, with this beautiful template here. So for example, if I put in Google, you'll see all of the data loading. You can see here. So in about 15 seconds at most, depending on your internet connection, and see, it's appeared. So this is a great tool, and I suggest to check it out. Also, do not forget to check out my investing blog from the link in the description below. And I hope to see you in the next video. Bye.